Assalamualaikum warahmatullahi wabarakatuh. So today I will uh, present or summarize about one article. The topic is the influence of credit risk management practices on loan delinquency in savings and credit cooperative societies in Meru County, Kenya. So my name is Muhammad SOLIHIN bin SALUDIN. My matric number is 1190844. So the aim of this paper or journal is to assessing the influence of credit risk management practice on loan delinquency and SACCOS, which is SACCOS in Meru County, Kenya. So loan delinquency is people who insist on repay back their loan, and SACCOS is the body like bank in Kenya, which is who accept deposit and give loan, but solely for their members and give a lower rate of benefits and return. So the problems here is despite SACCOS or SACCOS offering a small size loans to their members compared to other financial institutions in Kenya or banks, they experience a high level of loan default rate. Failure to control credit risk could lead to insolvency, as success of every savings and credit cooperative society largely depends on the effectiveness of their credit risk management practices. So, the objective of the study or this paper is to analyze the influence of credit risk management practices on loan delinquency in SACCOS in Meru County. So, they want to study or examine which is how the credit management practice will affect on the loan delinquency rate in SACCOS at Meru County. So the author has come up with one theory, which is asymmetric information theory, which is in a debt market. Information asymmetry arises when a borrower who takes a loan usually has better information about the potential risks and return associated with investment projects for which the funds are earmarked. So the author suspect that this is what happened to the SACCOS and their loan delinquency problem. So the author has come up with some empirical review that will be related to this problem, which is Fan Ho and Yusof from Malaysia. In 2009, they said the majority of financial institutions and banks losses stem from outright default due to inability of customers to meet obligation in relation to lending, trading, settlement, and other financial transactions. And others is from Moti, Mansire, Mujenda, and Selindani in 2012. In their paper, they say that credit risk control adopted by microfinance institutions have effect on loan performance. So this study proposed that the credit risk management practices are determined by credit risk control and collection policy. So the loan delinquency problem is based on how the SACCOs control their credit risk and the collection policy. So in this case, the author has come up with two type of method in to study the SACCOs problem, which is descriptive research design and census study methodology. Descriptive research design provides the insight into the research problem by describing the variables of interest, and the census study methodology enabled the researcher to gather more information to assist in analysis and arriving at accurate results. So after they have run their study, they have found out that 100% of the respondents were of the view that their organization considered existing credit policy and the state of economy were establishing a credit control policy, and that loans approval were done by a credit committee. Then, on dealing with clients who default in repaying their loans, the SACCOs in Meru County were found to sell clients' property to recover their money, with 37% of the respondents stating so, while 63% said they recovered from the guarantors. The SACCO were found to mitigate credit risk through credit governance. So, as a conclusion, on loan collection period, the study concludes that there exists a significant relationship between loan collection period and loan delinquency in SACCOs in MERU County, and credit risk control was also found to play a significant role on loan delinquency in SACCOs in MERU County. This brings out the need for SACCOs to enact strict measures to enable them identify potential defaulters before disbursing loans. Hence, at the end of the article, the author suggests that saving and credit cooperative society should adopt stringent policy as method of collecting loans as compared to lenient policy. This is because stringent policy yields high loan performance compared to lenient policy, and there is also need for SACCO to enhance their credit risk control, and this will help in decreasing default levels, and this will help improving their current loans repayment rate. And that's all for me. Thank you.